Hey everybody, welcome back to Trading ThinkScript. My name is Mike Fairborn, Senior Manager Trading Derivatives at Charles Schwab. Folks, I hope you're enjoying this roller coaster week as we've seen so many times. It is great to have you all here though, and today's discussion is to help you recognize what companies are participating in that roller coaster and which ones are sitting on the sidelines. In fact, which ones are maybe even inverse to that roller coaster. So I want to be talking today about correlations and correlation studies. I've got a ThinkScript set up for us to show us in a color-coded format what is correlated, what's not correlated, basically what is neutral, what really doesn't really move too much with the markets one way or the other in a lot of cases. But I did want to dive into that today because I think it can be a really helpful study, particularly in volatile market conditions. And we really haven't taken a good solid look into the correlation study, let alone taking a look into building a script around it, which we've done here. So it'll be fun to do. And yeah, just seeing what's moving up or moving down with the markets over set periods of time frames, over a whole basket of stocks too, like the S&P 500, the NASDAQ. So we'll hit that. Welcome to all of you. See a lot of familiar names here in the chat. Folks, any questions, comments, throw those in because I've got my great friend here with me today, Miss Connie Hill, who is fantastic. She is, by the way, she holds the CMT designation, which is the Chartered Market Technician. Difficult designation to get, but very good at technical analysis, and it's great to have Connie here on board with us. It is comforting to know she's there. Any questions, comments? I'm going to keep an eye on those as well, but you can follow Connie and I on X, Connie Hill CS, Mike Fairborn CS. So let's hit some disclosures quickly so we can jump on into today's discussion. All right, as it states here, equity and index options carry high level of risk. They're not suitable for all investors. Now, the paper money software application is for educational purposes only as well. Backtesting results presented here are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results going forward. Now, investing involves risk, including for some products that is more than your initial investment. Past performance of any security strategy does not guarantee future results or success. A quick look at the futures, because guess what? Yeah, we do dive into those futures in this class. There's no doubt about it. We dive into the charts. We do not trade them. So I just wanted to state or show those here so that you're aware of that, because we do like to reference those frequently in this class. A quick note too, if you are new within this class, we do develop, we discuss, think scripting. We have sets to think scripting here. One of those is identifying the goal. I was looking today at, hey, what is correlated to the market and what is not? In other words, when we see the market going like this and rounding over a little bit, what does that mean? And are there any simple approaches that we can have in terms of using indicators that are already pre-built into the platform, and pretty advanced ones, nice ones too, that we can tap into? That was today's kind of the genesis of today's thinking, and thought about it over the week. But again, tying into an indicator, and then from that, building out the ThinkScript itself with the ThinkScript tools. Of course, we will share that link at the end. And I'll tell you what, if you're in the live class, you guys get it first. If you're in the recorded version, you got to, below the webcast, we discussed it in the webcast, of course, different ways to use it, but in the description section down below, you got to click on more. I'll have that link posted down there for you. All right, now with that, let's dive on and just take a look at our markets here and see why a correlation study might be helpful when we're saying this rounded type pattern sort of continue. Yeah, it doesn't sort of continue. It has been continuing. It's almost like when you throw a ball in the air, right? It just kind of, there's a period of time where it rounds over. It's like we've seen the rounded tops and the rounded bottoms. In fact, a good quick way to jump in and see this, and I think some of you already know this, just put a minus sign in front of that. It's just because we're so used to seeing things one way or the other. But if you just do that, it just flips it around for you. And what is that? What do you see there? Ignore those Fibonacci's because those went totally whacked out crazy there. But look up over here for me. Anybody recognize what is that potential pattern right there unfolding? I can already see one that might already be there a little bit. if you said something along the lines of maybe a rounded bottom, you'd be right. But when it rounds on both sides, then what? It kind of forms a little bit of a, Michael's got it, C and H. Will, hey, Will, and Michael, yes, cup and handle. Wacky, next is the flag, as I said. Yeah, could there be a flag in here? And is this, let me just zoom in, is this a flag itself right here? Right there? I mean, I don't know. It's a shorter term flag. Generally, you get a big rounded pattern. It takes a while to develop the flag as well. It might be like this for a little bit, but it's just to be aware that, yeah, these are one of the stronger bottoming patterns. And sometimes, and many of you guys will see this, it might be a shoulder, head, shoulder inverted off the bottom, which actually does fit. It does fit that condition or that pattern right there. We've already kind of matched, I'd say up here somewhere, the measured move of that pattern. But like we said, and we've talked about, and I hit this a lot in my swing trade class, you can get patterns within patterns, and this could be a big one. So just be mindful. I mean, in other words, when it's rounding, yeah, you might be seeing a rounded bottom. Now, what happened to my Fibonacci's? They totally disappeared. That's fine. I didn't want to say them anyways. Now, over here, let me just do one thing. If we look at it in this format right there, you guys see? We did break out a low. That's a low. Now, if we did come up back here and did something like that, like a bear flag sort of a pattern, that could be a bear flag. And I think now you guys are you're clued into it a little bit more. Well, maybe you already were, but it does help to flip it upside down. In fact, I'm sure many of you already were, or most of you, or all of you were. But there you go. So it's coming down, flag. We don't know. We can say this, that a lot of times when conditions like this are being met, there can be just a simple, I've got so many of them, I might as well just use one of these. Simple moving average, I'll just flip it. It's oftentimes referred to as being in bear territory or bull territory if in fact we get below that level. I've got to show it here. There it is. It's just going to be a green line. That's our 200-day moving average, folks. And it could have held up near support or higher support levels. It could have held right there, but instead it didn't. It didn't. And in fact, it broke down. So a lot of traders would say, yeah, we are now in, for short, BT, bear territory. And it's funny because it's just right around that line. Interesting, because I'll pull it up right here. I sent a little tweet out on Apple saying that it's bouncing off its 200. But, there's some resistance around 260. We'll see if it gets above. But it's still kind of holding up a little bit today. By the way, it's clearly holding up a heck of a lot better than Facebook. Nobody calls it that anymore, but there you go. Meta Platforms. That is a doozy. Now, that is a lawsuit right there, and it was a fairly big lawsuit. Of course, the company's already appealed that lawsuit, but that's a big dip down, folks, and you can see that. Actually, there was a lower gap right there, and we've already closed that gap too. That's huge. I mean, this right here is about 8.2% or so on the day, but it's not like it was showing great signs over here at 600. It's, yeah, it was a 600 yesterday, and now it's below 550. So anyways, it was lower lows, lower highs. My point is, it's way below the sign, the indications of a 200-day moving average here. And it's, by the way, is highly, highly correlated to, as we shift on into our discussion now, the NDX, which, by the way, is also dipping below its 200-day as well, and kind of accelerating a little bit today, down about 2%. Just a quick glance at the futures over here, and we've seen some of these correlations, getting back to correlations here. There is the oil right there. So when you look at a correlation and you say even short term, let me pull up a correlation study right now, just to kind of show you, because there can be correlations that can start to pick up over a period of time. Let's kill the 200 just for now. I'm going to go ahead and just throw in a correlation study, folks. You could find this right over here. We built a script around it today, but just to highlight a couple of details. In fact, I'll just click this right here. Okay, full screen. Everybody see me? Okay, I mean, see the screen here. We're good. What this is looking at is a 40 period back in time. So this is 40 daily bars. Now, it's important to know daily because you can look at correlations over weekly and monthly timeframes as well, okay, for longer term. I'm talking about the daily because I think that might match many, and I mean many of your timeframes that you guys trade. All right. Let's see. Wacky says, "Hey, if we go down, Mike, what is the level? Oh, where we could drop down to for support." I'm gonna circle right back into that in just a second. Appreciate the comment because that is an interesting point to note. And let's just pull that up. You were probably thinking about the cup and handle. I'm going to use it on the other side to show you because I should have brought that point up, which I'll do. So, quick note, as I'm looking in the chat, there is a survey link that just came through. And if you guys are able to fill that out, that'd be great. You have to actually click on it before the session or during the session at any time. There's only 2 questions and a comment in there, if you liked it or hated it. But yeah, if you guys are finding value from these discussions each week, I love to be here. It's great to be within this group, and Connie here as well. Yeah, just smash the like button too if you are finding value. That is all right. Well, with that, here are the correlations, and I'm going to go ahead and just pull the study up right now so you can see it. Always expand these if you ever need to. And you notice that we do go. There are correlations to the market, and there are breakdowns and correlations. Right now, if you are below, I say 75 to 80 right down here in the negative range, this is uncorrelated to the market. In other words, what that means is when the S&P 500, which this correlation studies build on, right there, do you see it? It's right there. When we're hitting that, if we're below 75, it's counter correlated to the market. In other words, when oil is going up, and this is how you can spot there's general correlations out there too. It's a 40-day time frame. I could have used anything from 20 to 50 is really quite common. We're choosing 40. I've seen this before. I've read this in studies. It's about, folks, 2 months, 2 months worth. And by the way, 2 months encompasses a lot of trading activity, and that's why I'm using it. It could include swing trades, short-term trades, swing trades, and even intermediate term trades that are going 1 month and beyond. So when you start to see anything out there, and in this case, we are looking at crude light, if it is below a certain level, okay, then when it's moving, it might be an inverse driver or correlation of the market. In other words, if oil goes up, what's the S&P 500 doing? You're looking at it right there. It's going down, but specifically less than 0.75, 7528, less than 0.75 to 0.8. In that range, that's very inversely correlated. One up, the other one down. And notice we're just holding in this range down here. This can be very interesting because if you start to see patterns forming, let's say, for example, in crude, you see a flag pattern or whatever it might be, or whatever sort of pattern you're looking at, or a trend that's starting to break out, a close above the high, the low day, or whatever it might be, and you think it's going up, it could spell weakness for the general market. Okay. So it's another way to get a read on what the market might be doing. Now, I did want to go back to Wacky's question over here in for the S&P. By the way, yeah, this is going to be all whacked out now as I'm looking at the S&P 500 because it's like it's the same correlation. It doesn't know what to do, this study. So just kind of ignore that for a second. In fact, I'll just minimize this. But I'm going to do this and show you where that target is, because that was a good, interesting question that came into the chat here. And by the way, this target is going to actually work the way we're measuring it here, even upside down. That's right, even upside down. Take the bottom of this range and the top of this range, the cup itself. Oh, God, extending up higher. Again, I want to keep going higher. That line, okay? And we're looking at the distance here in terms of a much, much larger, right? This is not that minimum sort of measured move down through here that we were looked at, that we probably hit somewhere about here, where this move measured up to this move off of like a rounded bottom. It was actually inverted head and shoulders pattern right down here. It was the shoulder, the head, and the shoulder giving us the measured move range. This is different. This is in, yeah, I put it in blue. And the target there, Wacky and everybody, would be this. You take this range, when you start to extend above it, you can go like this and just take this all the way up to the top. Now, I'm going to actually give you a measurement there. I've got to pull it down further because it is such a big range to find it. Just adjusting that y-axis on the left just by a drag and drop, that is. I'm going to give you an idea where this is at. You know what? Let's just use the Thinkorswim tools to help us there because it's a little bit more accurate. Okay, so notice I'm using my my crosshair there to draw off those highs or near. This could be like maybe a more conservative one. And notice what I'm going to do. I'm going to duplicate it. I just right click to duplicate, pull it up right there. So that target is going to be closer to between 6,000 and 6,100, and that is to the negative side. You like how we're doing this pattern, like a bullish pattern, but that's your range right there. But it's still, remember, this is, the numbers are going down as we're going up. So you're still just getting your target. Now, we could do the same thing on the downside. I just thought I'd have a little fun with it, flip it upside down and do a bullish cup and handle here, okay? All right, but what does that look like on the charts now? Now we can go back here, SPX, and I'm just going to show you over here, 6,000 right in here. So I'm just looking for other levels of support or resistance. Now, if that cup and handle unfolded, and by the way, there is another way to do it too. If we were to go like this, right, and break down and go like that, well, then we also have that same price movement. I went way too low, but as a flag pattern that should be very close to the measured move of a cup and handle. Okay, but it's right in that range. So it was a great question. Thought I'd bring it up because, hey, yeah, that's what we're looking at, right? Is what might happen. But notice one thing as I highlight this, a big round number. Folks, what was the number we just came off of? Another big one. 7,000. We couldn't get through. We thought for months and weeks, I guess, a little bit more than a month, that there might be that possibility of getting there. We thought maybe the upside over that time frame. Hey, there were some signs, you know, we just looked at some of the signs. We didn't think it. We just said, hey, some traders have an expectation of it. But we thought, hey, might be an area where it could try to break out. It didn't, and boom. Okay, so there you go. Anyways, we've talked a lot about correlation, but this is a good one to talk through too. So good stuff. All right. Well, let's do this. We're talking about correlations, but what I wanted to do was create a correlation study then to kind of give us a sense of, as you just saw in oil, what to look for when we're looking at specific stocks. Like say, for example, I've got this company out there, IDXX. I'm cheating a little bit because I did already look at this stock. What do you guys say to this as a correlation right now over the last 40 days? And by the way, it's important to have the study up on the chart too, because we want to see the trend of this. Is it becoming more correlated to the S&P 500 or not? IDXX. It's becoming more correlated. So in other words, when the S&P 500 drops, IDXX is dropping. And it's getting close to a big number over here. And that big number, folks, is 1, which is a perfect correlation. That's at 91. That's a huge correlation. In other words, on the flip side down here, it's 0.75, right? Greater than 0.75 to 0.8. In fact, we're at 0.91. Massively correlated. So the expectation here is, especially with it going up and actually kind of plateauing at these high levels, and look how long we stayed up here too. You know, there have been some phases where it's been really highly correlated. Remember, we're looking at a particular time frame here. Does this match the 40, what we're looking to trade within a couple of months time frame? You know, maybe 1 to 3 months or something. Yeah, it does. It's correlated. It's highly correlated. So you'd want to be careful. If you thought the market was going to weaken, if we thought that bull flag, excuse me, that inverted cup and handle, is there such a term for it? There must be. An inverted cup and handle is going to drop, it's going to unfold. You might want to be careful with something like this. It might continue to correlate especially more recently. That's the idea here. Okay. Now, there are others too that can help us with that. I'm going to pull up the script right now so you guys can see it. I still want to leave some time where we can trade ThinkScript a little bit too. It's called Correlation X. And I'm going to talk you guys through it. I did elect to put it in a column format, and this will give you everything in a bright green color. Of course, you can change those colors in the script, of course, 75 or above. And again, we're looking at the S&P 500 here. I'm going to mix things up here in just a second and show you the NASDAQ, but look at all these correlations. Wow. These are all companies. I don't know why these haven't flipped to 75 yet. That's a trip. These should be at 75, but they're not. That's okay. We've got the numbers in here in green to show you 75 or higher. I don't know why it's not, but these are highly correlated to the market. So if you thought that it was going to drop and you were out there thinking, see, look, they're starting to fill in now. That's interesting. But probably because I have 500 of them is probably the key reason, I'd guess. But if you had a sense that it was going to drop, maybe these would be not bullish trades, but maybe more on the lines of bearish trades. Okay. Now, if it's not correlated, in other words, it's kind of marching to the tune of its own drum, come down here. Between 0.25, there's a big gap in between, and you can still look at those, of course, but the closer you get to 0, it means that between the S&P 500 and these companies over here, plus, so it's plus 2.5 to a minus 2.5. These are not really correlated. And the closer you get, some of them are getting all the way down to 0, and they're just not correlated to the markets over the time frame we're looking at. Again, very, very important to do time frame, because I've made a time frame adjustment in here if you wanted to use a weekly or monthly as well. Now, the one you're probably wanting to see, though, are those that are inversely correlated. So if the market's dropping, these might be going up. Let's go to the top again. I'm just going to click on my column so I can do it in descending order. One more time. There you go. These guys are all 0.75 and higher. And you've got some companies in here to look at. I mean, it could be of interest. I mean, look what we've got. Yeah, yes, of course. A lot of these oil companies, could they do well if we were looking at that? I'll do the inverted cup and handle first. They might. This group may continue to really outperform. Okay. Now, there are some variations in there. In fact, if you look close, you're going to see chemicals popping up, chemical commodities, Lyondell. Now, some of these already have strong trends, as you can imagine, but it's not to say that those trends might not continue. In fact, if the market dips, and by the way, oil is kind of cyclical, and so too are commodities. We don't know if this will happen, but historically, sometimes these have long trends up and long trends down. Are we in the process of an upward trend? Well, right now, the correlation says that's true. What else do we have in here, though? Dell. Highly uncorrelated to the market, and that just might mean very, very strong strength relative to the S&P 5. I mean, right now, I should say, really, really strong strength relative to other technology companies, which is exactly what Dell is right there. I put these up industries so you could see them, but there might be something going on there. Akamai, another one that might be strong in its group. Okay, but the majority of these, yeah, oh my gosh, what you would call integrated, and also like some of the drillers in here too, like the explorers, producers. You're going to find, this is one right here, Fang. Let's take a look at Fang as well. But just pull up these companies, and I'll go ahead and quickly share this. Oh yeah, you're welcome, Wacky, of course. The reason why I detached this is because it does take a little bit to load up. But just going back to my regular charts, let's pull it up right now. Here is Fang or Diamondback. There you go. Wow, Look at that correlation. So totally inverse. INV for short, inversely correlated to the markets. In other words, if this guy, if you're thinking the market might drop, this could be, well, it's been showing a lot of strength here. By the way, this might be interesting just to see on a weekly. There you go. Okay, so remember the point I made earlier? These oil companies, and go back and just look, don't ever take my word for it. Look at the longer term charts. But what you're going to find on many of these, because they are cyclical in nature, that, my friends, is a long trend. These are years down here. These are years. 20, 21, 22, 23 and a half, through 24. These are long-term runs. Could there be another extended run? There could be, especially if oil breaks above 100, for example. These guys stand to, right? If the price of oil is higher, just looking at it logically, if they're getting out of the ground, all else equal, they stand to make more top of the income statement revenues, also known as sales. And that's driven by that first correlation we looked at, which was crude light. Okay, but this can really be helpful to spot. Now I'm going to do a little change here. Let's just do this and I'll share this quickly, but I'm kind of on a roll here, so I want to get this going here for us. Actually, I'm going to pull this up to show you. So we've got it set up in place. It's all bare. I try to go as bare bones as possible here. And you can see how you can change the correlations right in here. Actually, I'll just share it while I got it. It's right at my fingertips, just so you guys have it. But I wanted just to focus on this so you guys all have this. But here you go. There it is right there. So that is the ThinkScript. By the way, ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data that's coming into the platform is accurate, and we do have good data, then the ThinkScript should unfold the way it's programmed to do. You can see up top what am I making my comparisons with. There is your S&P 500, folks. It's a 40 I put in. Some will use 20, 50, and others. And by the way, I did this at the very end. I wanted to add in so you guys had an aggregation period too. Now, what would you change this to? You can change this really quick without messing around with the numbers. Just change it into a week or a month. But you have to type in week or month, right, into that area and then run it. But it's all there. You can change the colors. You can change the variations over here too, whatever you want. I just made it simple. I just said, green greater than equal to 0.75. In other words, highly correlated, highly inversely correlated. And then, of course, down here in the blue, which is not correlated really at all. It just kind of, like I said, one way to say it is sort of marches to the tune of its own drum. So there you go. Strongly moving with the comparison symbol, whatever it is green. Red, strongly moving opposite. Hint, hint. Some of those areas where we're going to be looking at, if the trend continues, I mean, that's the idea, right? It just gives you a hint as to what is moving counter. And then with this study, one thing I do like about it too is, first of all, this aggregation period would separate it out from a lot of other studies. This is pretty easy to do up top. And then what you can do is, let's do this. Just remember to do this sort of differently. NDX, come down here, and then go right into, we'll use 40, that's fine. But I'm using the NASDAQ 100 now. Smaller list, we're going to keep it as a day. Key thing I want to do, I'm looking at the S&P 500 here. So what I need to do, these are all compared to the NASDAQ. Does that really make sense? It could. It's a bigger basket of what's, relative to the S&P, the NASDAQ. But if I wanted to look at the tech-heavy NASDAQ, remember, one basket compared to the other, very, very important to do. NASDAQ 100 to NASDAQ 100, which is what we built this to be. So FANG is in here. 0.83, you're going to see some that are going to correlate. Of course, these are close to correlating with the market. These are kind of doing their own thing. In fact, this is very, very light correlation through here. Ooh, yeah. Which is unusual. I mean, you want to find out which is not really moving that much with the NASDAQ. Kind of does its own thing right here, which would be interesting. Because let me just point this out. If you take a basket of these companies in here, at least as of late, and those guys are forming, let's say, a bull flag pattern or something. Triangle, inverted head and shoulders, whatever the case might be. And you see this kind of a flag pattern within this group. But on the other side, we see the NASDAQ showing more signs of possible weakness. This group or the group in red might be best suited for a follow through of that bull flag. I'll say that again. This group that is uncorrelated or inversely correlated might be best positioned for a follow through, because they're just over this time frame, whatever one we're looking at, they're doing their own thing. It's not to say that if the NDX really gets pounded, it might make it an issue, but they're just less inclined, based upon this study, what is showing us, to go down with the market. Instead, maybe more upside, even if the market goes down. So it's kind of a little bit, you could say, of a buffer relative to the market is one way to look at it. I'm going to click on this again, but it gives you kind of that buffer zone. These guys are highly, highly correlated. Yeah, Meta, we looked at Meta, and it is highly correlated. And it still is, by the way, today is highly correlated too. No doubt about it, 94. We're getting so close to 1 up top. Tesla is as well. What do you see over here? You know what I'm saying? A lot of? It's a good additional way to get more insight. That is the Mag 7. They call it magnificent, but it's been tough this year, no doubt about it. Check. I'm seeing Google down there as well, but Mag 7 is heavily correlated right now into it, but some are not. Like Apple is not as much. I don't know where Apple is at. We could put it in alphabetical order real quick and just find it. Let's just do that. There it is, Apple, 0.61. So not as much, but still correlated. So it could still, in other words, if Apple tries to bounce off that 200-day that we looked at, folks, early on, it could still struggle to get higher if the market continues to dip lower. All right. I wanted to look at, like, say, for example, let's do this before we're done on the study itself. So do you guys know how to add this in too? Right? So you copy that script in, and then you can go into, let's say, Market Watch or a watch list, right click, go down to customize. And once you've saved it, you'll find it over here in this group. Like some of these we've built, right? Well, okay, I didn't build all these. Like, for example, the 1 year, somebody else initially built that 1 year percent, 3, and etc. But yeah, you could just double click on it and pull it over. Just remember what you named it and pull it over. All right, cool. Watch this. If I use the NASDAQ 100, and I'm going to just flip one area of it, we're going to try a weekly now. A week. Oh, well, just click. There we go. I could have just. Oh, week. There we go. And you'll know it's going to work because, yeah, it's all in place. In fact, hang on. It would give you an error if you spelled it wrong or something. I just click OK. Now we're looking at a weekly time frame. While that's loading, let me go over here to the charts, and I'm gonna. There it is. I'm on my weekly. Cool. I'm gonna add this in because maybe I want a long-term comparison. If my time frame is outside the 40 days or whatever it is, 40 bars, correlation. There it is, right there. Click on it. I can look at something like a 40-week, much longer time frame. Trust me, it's a lot longer. 40 weeks is very comparable to the 200-day moving average, actually, on a daily chart. But here you go. Okay, so notice this right now is right in that 25 range where it just kind of it's doing its own thing. Now, keep in mind weekly. Keep in mind weekly, but it does go through different areas of correlation and non-correlation. Remember, I don't want to confuse anybody, but you're looking at the time frame. If you're trading a pattern or whatever that's within, developing within a month or two, you're probably going to be using that daily chart. Okay, come over here, and there you go. So now these are setting up. Let's click on it. Charter communications, very, very uncorrelated over the past 40 weeks. Gosh, that's getting up to 52 weeks in a year, right? You're getting close to a year. And you click on it again, and you can see these are very, very correlated. Wow. Look at all of the Mag 7s in here. Just a good way to pull data, too. It's more than just spotting potential opportunities that somebody might be looking for. It's also a way to provide us with some data as well. By the way, AppLovin, that might be the biggest loser on the day. I got to take a look at it. I'm just noticed that it's 9. That's above even Meta that's getting smashed. But AppLovin, really? Okay. APP, just wanted to look at it. Oh, okay, percentage-wise, yeah, really quite big. In fact, that's down 42 today. Percentage-wise, it's bigger. I believe Meta's down in the 40s right now, but it's more like in the 500, 600 range. Okay, very, very interesting. But again, are we trading are we trading, in this case, it's more like trading year charts or not? The last point I want to make here on these correlations, very, very important. When you see low correlations, and this is more like a longer term, this is how we can use the longer term studies. Now, I am using a 40-week, 40, almost a year's time frame, and we're getting up there. This is referred to as reversion of correlations. Notice we came down, we weren't really as much correlated, and you can see the history of this over a period of time. We're just using AppLovin as an example. This is going back, let me do this. Oh, right there. That's the one I wanted to choose, sorry. But if you go down and you see to the lower ranges, this is more like it, but you can see the correlation. If it's low to the lower end of the range, sometimes it will bounce up to the upper end of the range too. Weekly, think weekly. Longer term, it's called a reversion. Correlation reversion. And you'll spot this from time to time. Let's see, Exxon, just as an example. Here's a great example of reversions. It wasn't really working, it wasn't moving much with the market. Goes to the bottom of the range, expect it to work quite a bit. Longer term. But this is kind of a different scenario where prices might be strong going forward. So keep a watch on that. A couple other stocks, we're just about done with our session here, but want to look at a few of these too, because I did want to look at, getting into trading some of the ThinkScript as well. Now, this is one that did have kind of a lower correlation, inverse correlation. And you'll notice that it is a chemical company. Folks, these are sort of some of the companies that, if you notice on a lot of these flag patterns, traders who've been looking at these have probably had fairly good luck with these companies right now, right? At low, or I should say inverse correlations. And you can see that right now. So something like this, be mindful of earnings, but this could be just not this stock specifically, but just that general move. What was AKAM looking like? Something similar. It's kind of maybe towards the upper end of the range. Traders might be looking for a 2 to 3 day pullback or whatever the case is with those low correlations. I know we saw Dell in there too. Yeah, Dell just hit the swing trade target in our swing trade class. So that's one that, at this point, you're already up at the upper end of the range. You probably want to pull back. But that's what those lines were right there, by the way. So, these can keep rolling. Now, here's one using the TTM squeeze. And we're kind of still in that, using the correlation as well. It's not as highly correlated as where it stands right now. It has been trending up from inversely, but you can see we're looking at a 40 time frame, 40 bars. And so what are you including? You're really including back. I'm going to go back 40 bars just to show everybody what's including this whole range in here. Now, within that range, what do you have? what do you have? You went up, you went down. If I did a correlation study within 1 month, really a swing trade time frame, this is going to be totally less correlated to the market. In fact, this is probably going to be coming down, but it's capturing this range. So a 10 could be totally inversely correlated, but you guys kind of see that even with a 40, it's still within that 25 range. And so some traders would be saying something like this: well, I got my close above the high, the low day. Do I think I might break out and extend higher? Perhaps that might be the case. That might be unfolding here. It's a little bit, I mean, we kind of, yesterday might have been the trigger, or a signal, but sometimes traders might, I'm just going to do an example here real quick. It's kind of an expensive stock. I'm just going to do this as an example trade here. And I'll show you how we could do something like this if we were looking at a bull flag. Let's do a bracket order, and we'll set it up exactly. It's expensive, so I'm just going to do something like this. And we could do 50. In this case, I'll just do a 25. Just make it nice and smaller than 100, than a round lot. Good till cancel. I'll set these up a little bit higher here, and I'll adjust them on the chart so you can visually see where I'm setting those levels at. I'm going to tab through. Remember, good till cancel, confirm, look over here, just confirm everything at your buying power effect, etc. I'm just going to send it on through. And once that fills, I'll go to the chart and just show you, for example, let's clear that off. On this trade, let's just do this, because actually I need to pull it down. The stop order, remember, stop orders aren't guaranteed to be filled at that price. They do compete with other existing market orders. There's no guarantee to be filled at or, near that price. But I just put it below this level, and sometimes traders will actually use, like, say, for example, they might use the prior bars low if they wanted to. But if I'm doing a true measurement for the flag pattern, I'll get back to these things. So I'm using the initial pole of the flag right there, and I'm going to just duplicate it and highlight it off the bottom of that level right there. So roughly 220. So in terms of my potential exit order, I'm going to just go right just near that 220 level, somewhere right there. So now you can get a sense of potential resistance, or excuse me, potential, how can I say this? Risk and potential reward, which is why some traders will use these. But this is one, actually, this is one of the think scripts that we'd used previously. We'll wrap on this one here, but this was fell into the TTM squeeze. That's a class we did previously. Take out the histogram. I'll just leave it like it is. And then you can see we are in the squeeze, but we might begin to come out of the squeeze into green. So the Bollinger Band below the Keltner channel, a lot of times when you get that compression of prices, you might get a breakout. And that breakout is what might fulfill an existing larger term bull flag, while correlation is still not highly correlated to the market. Remember, it's healthcare, defensive. All right, everybody. Good being with you. Hey, if you like today's session, smash that like button. Again, there's a survey link in the chat. Be sure to follow Connie Hill as well. Connie Hill CS, Mike Fairbourn CS. But yeah, if you get a chance to fill out that survey, love to hear back from you. And you can just put any comments you have or topic requests, whatever the case might be, in there. Great way to pass along topic requests that I'm happy to try to incorporate in our discussion. All right. Hey, thanks so much, Connie, for your help. And great to be with all of you today. Folks, look forward to future discussions, and definitely take this tool to get you just an idea of what those correlations are to whatever basket. I mean, we could be using an index or an ETF for a basket of stocks, and you could do some comparisons there, like for an industry or sector. Okay, so can be helpful to see what the movers are correlated to it. All right, on that note, guys, take care. See you next time.